Slow night, slow night. Awesome. I just saw your question, Justin, by the way. Yes, there is a new private group at the moment. Little Frenchies. So that's why you might see a couple new purple names along the way. Should be close to six by now. But yeah, you'll start seeing some more purple names show up as time moves on. Just making sure you guys can see my screen. I just shared it. Awesome. All right. Well, pretty weird conditions at the moment, right? So definitely I left with a beautiful week in game back to this shit. So I guess karma. But we are in, if we can say it, as consolidation, right? Whenever you have big divergence between Nasdaq and ES, you understand that the conditions of the market at that current moment are, for lack of a better word, shit. And that's just how it is, right? There is huge divergence on the highs, uh, holding on after even a couple days, right? If I just mark it out here, you'll see as I hover over that there is some large divergence between ES and NQ at the moment, and that leads to very high resistance conditions, as you might have seen from today and any future days. And oftentimes you'll see a lot of search and destroy in these conditions, which I have not spotted that much of yet, but we'll have to wait. And without news, well, honestly, on a week like this, anything could happen. So even tomorrow could be the nicest day of them all without news, right? But I'm definitely going to be concentrating on Thursday here, possible Thursday reversal on the ES, which would mean Nasdaq going lower, ES following that idea, but we're in line with the weekly outlook, looking for SMT on the highs. Now, if we dive lower to a 4 hour, where you would be looking for setups since the daily is unclear, right? So I always say use your higher time frame to form a point of interest and then find a setup. Well, you don't have much to find a setup at the moment because we are straight up consolidating. We've been consolidating between this fair value gap. Let me just point it out as a 4 hour fair value gap and the liquidity resting within this inefficiency for a while now, as you can tell, right? For the past 2 to 3 days coming up after the Thursday, which I believe was CPI expansion. I might be wrong on that one. But we've been stuck in between, and on ES, we've just been playing off of new week opening gap to expand higher. And as we can tell, it happened successfully on two occasions at the moment. And NASDAQ has just been consolidated within expansion through with the new week opening gap. That's why I have them lined up on my screen right now, because it's on weeks like these that is set up to your new week opening gap or from your new week opening gap will be best. I did want to go down to a 15-minute chart just to showcase the London framework, which worked beautifully on NASDAQ, but now going down to a 15-minute chart, we can see the differences between NASDAQ and ES. So definitely, I just want to repeat it, uncorrelated markets at the moment, so they are not the best, they are not the clearest. If we look purely on NASDAQ, we had an overnight Judah swing, which basically came from the news specifically. We had 8:30 news. That led us to believe that London lows would be an objective. As I said in my Twitter thread, where I talked about all of our intraday draws on liquidity, this brain dead, not adding bias, not adding anything into account, is 56% win rate, 55% win rate. I'd have to go back and check the actual numbers, but that's how I have so much faith in these, even though we had a news Judah swing lower, right? One thing is that we barely took out these lows. So these to me still were relative equal lows. If I just mark them out like this, because there's still liquidity below this specific point. Tried to catch that London framework kind of in entry around 10:05, but it was such a quick run. We'll go check for sure. All right. If we just look at our 15-minute chart, we can tell that right off 9:30, we had a beautiful Judah swing higher. And yes, there was SMT. I just need to look at where it was just to make sure. I was comparing this swing high, which we did not take out, and we did. Yeah, exactly. All right, so I'm gonna mark it out. Always looking at hourly and 15-minute SMT whenever market opens. I feel like that's always the best way. And again, even if the markets are uncorrelated, at least they are consistent, right? ES is showing constant strength to the upside as it has, and NASDAQ is trying to go lower, showing weakness, right? So at least we've been consistent in that. I did want to showcase the London framework in confluence with 930 open due to swing higher. You had everything that you needed to place a trade. And yes, the 830 news specifically went lower before expanding higher, but did that lead to an expansion? No, it led to further consolidation, which means what? Well, you can associate that move as a manipulation to get your true Judas swing, which honestly to me was pretty clear from that point on. We had SMT on the highs, everything was present. We either had further SMT, if I'm not mistaken, if I'm looking at a 1 minute chart. Well, this is lower, this is higher. SMT of equal levels, it is not the best. So definitely not going to showcase this. And there was SMT at the lows, which is just about ES catching up to NQ. Because if NQ drives price lower all the way to your London lows, which with added confluence, because you have your, what's it called? Your new week opening gap. I just forgot it for a sec. I am going to remove the higher fair value gap. This was our 4-hour fair value gap, which we marked out. But you had your confluence with the specific London low alongside your new week opening gap. And anytime I take a trade off of new week opening gap, if I'm looking for continuation, my stop will be at new week opening gap. So I don't mind it price being drawn back into that range, but I want price to keep going lower afterwards. All right, so 930, we open. What do? Straight off the bat, we form a unicorn. Well, let's call it, go step by step, right? Straight off the bat, we form a breaker block. Now you have standard deviations you can use with that breaker block, which line up beautifully with London low, creating additional confluence. Now data lows right here, I'm going to mark them out as a partial since they are near the 1.5 standard deviation levels, which is oftentimes associated with retracement, right? So mark this out as a partial, data low. I understand that this low is of higher importance than any type of low. But now the same question comes of, okay, but where would you enter here, right? Where would I enter for this specific trade? Well, there's no right answer for that. If we are talking purely about the Rise model, this is your unicorn that you'd use for an entry. We'll dive lower. We'll dive deeper into it, Terrell, once we get to that 10 a.m. I do want to showcase this first setup, which is the first Rise model. Would it be a good idea to enter the 945 wick if it just didn't reach the fair value gap? Well, you'll find yourself shooting yourself in the foot more often than not if you do that. Definitely. So I do not look at a wick and say, oh, it barely didn't go back into it, so let's enter. Because no, then I'm entering here, and then I have to allow for my stop. No, I wait for my model to form, and I understand that there's a high probability of it retracing there. And anyways, if we did retrace all the way up here, it would be a worse setup because I don't expect it to retrace here because we have a balanced price range. So I don't want it to retrace there. So I don't mind letting it run without me and then entering later because it shows me that this setup is now higher probability. It's not about trying to catch the perfect amount of R's, it's about having the highest consistency, which only comes through high probability setups. Right, so I am showcasing this entry right here, and if we look at the 3PD array stop loss rule, had an order block right here, fair value gap, and I am looking for another one that is closer. We have some inverted fair value gaps to the left here. They are a bit far to be used pretty much, but as I said, I don't want to see price retraced into here. The easy stop loss to put is here, and if we look all the way to London low, it offers a straight up 2R. So that is a setup. That is the pessimistic setup, if I can say so myself. But with this consolidation being broken, I see a framework of AMD, right? Accumulation into manipulation distribution. So I'm confident with trusting that it will not retrace to this balanced price range because it does not need to. So then I'd have my stop at the high of this order block, because if it goes past, it's going to retrace into here, and all of a sudden this is not a setup that I want to take part of. So yes, the RR looks a little better here, and you did have the opportunity to take a partial here with 3R. So I did want to show you guys that as the trade I took. But if we are looking purely mechanical and we disregard the inverted fair value gaps that they are here, like if we look, we have an inverted fair value gap right here, which would lead to, well, it got invalidated actually. So no, unless you're using Reapers, this is your stop loss. This is the best stop loss with a purely mechanical 3PD array approach. But you still got offered 2R all the way to your objective, which got reached pretty quickly after a little drawdown, 13 minutes in the trade. With that 2 standard deviations coming on the new week opening gap CE, you would look for a reaction at this point, but we touched it, and then next candle over expanded through. So you had your confirmation to hold to your final objective, which was London lows. So definitely a beautiful trade. If we look at ES, the same trade, of course, it did not reach London low. Why? Because this is the strongest asset. If I'm looking for a short, I'm going to short on NASDAQ. And if I'm looking for a long, I'm going to long on ES. That simple. Which leads us to the following possible setups. Let's say, for example, you lost this one. Well, now your objective is met, right? London low has just been met. I am going to keep London low on here just so we can see it. London low has just been met. There is SMT at a key level, right? London low. So you don't have to even look further because there is SMT at this level. And now you had some long opportunities here. Now, we are counter bias, as you can see from the high resistance of the move. So is it the best possible trade? Not at all. Is it an A+ setup? I would not consider it so, but it is a possibility for a scalp. So I did want to mention it, but we are not going to go in depth about the possibility of this setup. But more specifically, you'd be looking at something on ES right here. You had beautiful equal levels here to target, very quickly ran to that level and then expanded a tiny bit harder before getting into a lunge continuation lower. So I would much rather keep my runner that has been here, took profit here, took profit at data lows as well. For example, 3 contracts. So one taken off here, one taken off at London low, and then just hold break even right here. Yes, you just lost out on, what was it? 2R to London low. So probably 2.5R. And now you're only up 0.5R, but it's a runner. You shouldn't care about a runner. If not, don't leave runners. That's my mentality with it. If I care about the runner, then it is not a runner. Any type of runner, I just close my PC and come back at specific times to see if it has reached a specific objective I had. But you could have gained a continuation. But if we look at the result, was it worth it living through this whole retracement, losing out on, what is that, like 100 handles just to gain 21 handles? No, not at all. Right, so definitely would be a great idea to just take out a London low, or you could have held up until the 4-hour fair value gap, which is our gray zone lower. Definitely, if I'm talking about today, that is the setup that I would consider to be the only good setup. Looking at the day, right, zooming out, you'd be like, okay, well, even if I didn't take this, maybe I long during lunch, or maybe I waited for my 2 p.m. power of 3 and long in the PM. Yes, these are valuable setups. I am going to look at the PM setup and show it to you guys. But the truth is, the only trade you wanted to take part of would have been the morning short, because that is the only high probability opportunity that there was. 1009 Wick respect perfectly the CEO for our fair value gap. I believe we were 1 tick away, which is what we call allowable. Well, 1 handle away, which is allowable, right? But I would not regard it as it respected the CE, because whatever takes, by the way, answering a question on Discord, but whenever you're talking about 4-hour candles, like, see what happened, right? So yeah, I did respect it, but then we utilized this and then formed a continuation and traded through it. So if we were really to respect that level, we would have just tapped it. I formed a setup within this fair value gap and then expanded higher, sure, but it's counter bias. Why? Because we know that when it's bearish, we don't expect it to respect bullish fair value gaps. If it does, it is only to retrace to then go disrespect it again, as we have seen, right? This is something I teach you guys, right? I have a lot of students in here, so I'm talking to you guys more specifically. I say it all the time. Whenever we're bullish, it doesn't mean I won't respect. Whenever we're bearish, it doesn't mean I won't respect my bullish fair value gap. But the only thing I'm thinking is for how long? For how long do I think it's going to respect it? And as we can tell, we only respected or shown interest in that area to provide for retracement. And if we look at our 15-minute chart, intraday chart, right? That retracement was only to retrace to our premium inefficiency of my 15-minute range, right? We retraced into my 15-minute fair value gap before continuing lower. That was the only point of that reaction off of that 15-minute of that 4-hour fair value gap. I'm still getting warmed up. First price action back, so I'm a little slow. Sorry about that, guys, but we'll get straight back into it. So the only thing I'd be willing to accept is if you took a continuation entry off of this at the inversion of this gap, right? I've talked about continuation entries on multiple occasions. I believe I even have a clip of that up on my TikTok, right? So definitely you had an opportunity off of the inversion right here for continuation entry all the way to this low resistance liquidity. But again, like I can show you guys 1,000 different setups on the day. But the truth is, if you didn't take the morning short, well, personally, if I didn't take the morning chart, I wouldn't want to be in this market at all. So that is my opportunity. That is my opportunity. And if I miss it, then I miss my opportunity. I'm not looking for another trade after that. Why? Because that was the perfect opportunity. And then I can allow for a possible PM setup. But even then, I told you guys we'd look into it, but we won't. Why? Because it's ugly, right? Yes, there is SMT. Yes, there is a continuation, but it's counter bias. So you're basically trading a retracement and you're asking for it pretty much. At least for myself, it was counter bias. You're allowed to have a different bias than what I do, but I was looking for expansion lower through new week opening gap. I'm just waiting for ES to catch up or for ES to overpower NQ and NQ to go target buy side, which I don't believe will happen. I'm looking for moves lower at the moment, primarily moves lower, pretty much. So yes, again, we could spend hours looking at price and what it did today. The truth is, there was your opportunity. If you missed it, you could have tried the PM setup, but that is the type of trade where I would share that I would only take on my evaluation account. I would never take on a real account or on a funded account because it is not high probability. On that note, do we have any questions at all about what happened today, right? Maybe you guys took a trade and you want me to go over it with you. So just from the executions, I saw a lot more people had a harder time today, but to be expected with the current weekly development of the candle, right? It's high resistance possibilities. If this entry was valid, what entry, Terrell? And when you say that you want to know if the entry was valid, what do you mean? You want to get up here? All right, get up here. Go ahead, Terrell. We can hear you. 4 hour barrier 3. Yeah. 5:15 a.m. I wasn't on the right day. All right. 5:15 a.m. 5:15. 5:15. You mean high, low, higher high, and then breaking through it? I'm gonna tell you like I did so many times in the classes, and I'm gonna tell you you're pushing it. You're looking too far. You don't have to. So why would you start looking at every 5 minute inefficiency and okay, this is a 5 minute unicorn. I don't even use this breaker at all. I don't regard it as a PD array. And you mean this specific open high, right? This to me I'm late because I utilize the implied dealing range. So let me just pop it up on my chart. Whenever I'm there, I would utilize the implied dealing range, and I have very specific rules, whereas I cannot take an entry if it has moved 50% of the distance to my objective, which means this is equilibrium of my dealing range right here. Oh, I can add text now. That's awesome. So equilibrium of my dealing range, which is just quarters drawn from the high of your framework to your objective, London low, which is my draw. So anytime I'm past this 0.5, I can't take a trade. Why? Because there are no high probability opportunities there. How many times will you short this fair value gap? How many times out of 10 will it go straight to your objective versus form a retracement higher, stop you out, and then go to your objective? That's how I define high probability and low probability conditions. And for me, a high probability condition forms above this specific line. If not, it is what I say when I say I'm too late, right? I'm too late to my target. That is not implied dealing range. Yes, that is just a Fibonacci from the high at 939 to my London low objective, not drawn correctly. So it's just saying that once we are past the equilibrium of this implied dealing range, then I don't look for trades. It's just a rule I utilized, and it's a way of scaling in that I also utilize, but it's just a way of understanding. If you want the easy way of saying it, is after it's already moved a certain percentage to your objective, you're too late. There are no high probability opportunities later. Will you take a scalp and get to your objective? Maybe, but I don't trade based on maybes. I trade certainties that have a high probability of success. That's how I've gotten to a very high win rate. If I would trade every trade like this, then I'd get fucked a lot of the times. Yeah, it is not a way to get a bias. It is not a way to establish direction or get trades. It's just once I have my trade idea, from this point on, Judah swing higher, 930, all my confirmations are there. I'm looking for a short. Now I'm just waiting for my model to form. My model formed here. Right? This is my unicorn. But if my unicorn did not form, I didn't get an entry, and a unicorn formed here, I wouldn't take it. Because I understand that we're already too close to my objective. It's too far. I have a minimum framework that I need. And that is past my minimum framework. That's just how it is. So that's how I skip trades, which stop me out more often than not. And yes, in this specific case, it would have worked. So if you did take that trade today, you might tell yourself, good job. But following my model and my rules, I would say you were too late and you FOMO'd. My pleasure. My pleasure. All right. Do we have any other questions? As you guys have just seen, I got time. Got to go back to painting very soon, but I got time. Tengo una pregunta, ¿cómo defines un setup de alta probabilidad contra un setup de baja probabilidad? All right, so I hope you understand my English, because even though I just came back from Cabo, my Spanish is pretty rusty. So I do apologize if not. Oh, I did understand in Spanish, by the way. You were asking me how do I differentiate between a high probability and a low probability setup. It all is based on my testing. So these are not things I am willing to share because it is also very model dependent, right? Your specific type of trading, how you are comfortable, what model you have made for yourself or taken from someone else, who cares, right? But your specific model has conditions in which it performs better than in other conditions. And you have to find these conditions and recognize them. I know that in certain type of conditions, for example, I'll tell you this. After 230, no unicorn is valuable to me. Because for my specific model, there are a very low percentages of setups after 230. So I know that if I spend my time looking at price after 2:30 p.m., by the way, after 2:30, then I know that more often than not I will get losses because there aren't many winning setups there. So that's what I say when I would frame a low probability setup. I would say that it's conditions where your model will not perform very well. When I'm talking about the morning, the specific condition is when price already has done its low resistance liquidity run. After low resistance comes high resistance. That's just how the market moves. And I do understand that in high resistance conditions, it is not my model, but me that underperforms because I get scared, I move my stop too quickly, I take profit too early, and I end up placing a trade that my final realized R, if it's a win, it's 1.7 R, and more often than not, it's a break even. So I don't want to waste my time. So that is the specifics for the morning, but in general, I just gave you the example with the afternoon. And how you know what conditions your model best performs in is through a lot and a lot and a lot of backtesting, right? Thankfully, now I know how to code, so I can do it automatically. But I did spend hundreds of hours backtesting my Rise model before even trading it, not even showing it publicly. Before just trading it, I had hundreds of backtests. So you really do need to know your model and your ins and out and the conditions in which it performs if you want to know and be able to adjust, whether that's risk or trade management or so on and so forth. You might hear your voice on the Rise account. No, no. By the way, if you guys are ever wondering and you want to jump up here and ask a question, your voice is not being recorded. I feel like that is the safest way of avoiding any type of issues people might have. So on YouTube, for the recording, for the price action review, no one can ever hear anything other than my voice. Did you enter on the inverted fair value gap at 951? I did not. Did not. I entered on this specific fair value gap. If you are talking 951, there is no inverted fair value gap at 951. So I don't know if you had the wrong time there, but I entered specifically on this fair value gap. My trade looked like this. I actually had my stop just a little above this order block because I thought it could possibly wick through. So I just didn't feel confident placing it straight 16. I just put 1.5 handles above. And I took a lot of profits at data lows because I thought that is a place where we could reverse. Then I saw that 10 a.m. open high, and I was very confident in holding all the way to London low. So I had a nice 3 point something R realized today. EFVG at 9 a.m. So that is a Reaper. So if I'm looking to short off of this fair value gap, which got inverted and then disrespected, then that is a different thing. Yeah, 901. So that is not an inverted fair value gap. That is a Reaper, something I will never teach because although it is useful, it is not often useful. So even when I see it in price, I never utilize it. I always see it and I'm like, oh, that's cool. That's a Reaper. That's just ICT for you. T, what is your full name? I can't see it because I am in streamer mode. Give me a second here. Trader MNW. Did I answer your question correctly? Just making sure you were able to understand fully. I hope I'll take that as a yes. Do we have any other questions about today specifically? And yes, we've concentrated on the first 30 minutes of the market, but that is where we had some nice opportunities. So that is where I want to concentrate on. All right. Well, I don't see any questions. That's awesome. I wish you all a great night. we'll see each other back on Thursday for another price action review. Hopefully, I see you guys again in numbers. Been very nice to see coming back from vacation. I'm getting back into it, speeding up right now. So, you guys have a great night. We'll see each other on Thursday. Good luck trading this week.